Buongiorno, fellow investors. Today we're going to discuss a story of destruction that has happened over 2 decades now, but that might also bring towards an opportunity, a value investing opportunity, as many investment managers expect Telecom Italia Mobile to be at least a 2x, if not a 3x from the current level as they sell their fixed network to KKR and get the money, lower the leverage, get revalued, and then pay dividends, etc., etc. And this is, as they say, a easy 3x. However, the market doesn't agree, and the recent capital markets day of the company dumped the stock down another 25%. But let's discuss, because if you want to buy when there's blood in the streets, then you have blood in the streets here. As I said, they recently had their capital markets day, and now that they will sell their fixed network, they say they are free to run. Just to show you what is Telecom Italy. So fixed network telecommunications, 40% market share in Italy with the competition, but this is the Italian market and this is something to be understood. 8 competitors, that's something very important to know, and we'll discuss more important things about the Italian market. Mobile network, okay, second provider after Wind and Free, so okay, but then we still have 3, let's say, important competitors, and you have to see how a business in such a competitive environment as Italy can develop and what is the risk and reward. As always, at some price it is a clear bargain that will give you great returns. So let's discuss the free-to-run strategy. And first, they are netco disposal, using that money to deleverage and then deliver on growth, better indications, and then profitability that will lead to dividends and repurchases. Now they have, after 30 years of destroying value, an unprecedented opportunity to unlock value for all shareholders, and their strategy is to do technology, become a service company, client-centric, and all that management blah blah that you hear everywhere. But the key is to return to growth, and their revenues will go up, their costs will stay fixed, so their profits will go up in line with the revenues. Their EBITDA after leases minus capex will lead to 2 billion of free cash flows. Compare that to the 5 billion market cap, and that's a return of 40% yield when they do this turnaround and create growth. And that's the promise, but somehow the market isn't buying it, because, as I said, they will increase average revenue per user, they will start growing from negative situations, they will increase the platform, increase the sales, and everything will be better, going beyond connectivity. But the question is always, how are you going to do in a very, very competitive market? Italy has already had 2 price wars in the early 2010s, in the late 2010s, and you can see here how market revenues were constantly on the negative. But even more important here, something we'll discuss in a future video when I get the time to prepare it, is this. Compare European Union revenue destruction and Italy. This is not that bad, but compare it to Italy over years, it's really, really ugly. And one of the reasons for this is the following. This is Italian GDP, and it went from $2.4 trillion in 2008 to the current 2.1 trillion. So that is a 15% GDP destruction over 15 years, measured in the reserve currency of the world, which is the US dollar. No matter what European politicians tell you. France, terrible. Spain, also terrible. This is ugly, and you can see that reflected in the quality of life for Italians, French, and Spain. This is something very important. We'll leave it for a special video. But then again, turnaround strategy showing steady results, they are still having negative growth, but they present it as a success, and they will try to do something that even telcos in better countries moved away a little bit. They will go into all consumer finance, health, education, and even telcos in Europe that are more forward than the Italian market have started to leave that part, but the plan is to simply grow consumer, small businesses, technology to gain on their position in the market. But it didn't work for the last few years with telcos across Europe with less competition than the highly competitive Italian market. But here is the game changer. They say they will sell their fixed network to KKR for 22 billion. That will allow them to deleverage 14 billion euros. That will leave a few billion, 5-6 billion euros of leverage. That will drive them to best-in-class leverage ratios for the company. This should be closing by the end of this year, and then some investors expect a re-rating by the market from the company, and there you have your 100%, 200% return. If we look at the numbers, they are selling something, and KKR is not a stupid investor, and they are selling the NetCo with 4 billion of sales, 2 billion of EBITDA, and now they are paying 22 billion for this. And here Telecom Italia Mobile says that their EBITDA minus the capex will be zero. I don't think so. I think they will have a 3 billion EBITDA return on this investment, and that 3 billion EBITDA will come from the telcos and even from Telecom Italia Mobile. There is something fishy here in their presentation, because if I go to KKR and I look at their expected returns, if we then go for infrastructure, private infrastructure, okay, they say going forward returns will be lower, but they still target 8%. 8% Italy, likely a little bit higher than the average for the US, etc. Thus, I don't think is correct. Maybe the eliminations have been calculated wrongly. This is also now a risk. Also, something that shows maybe not the financials of this, but Vivendi as a shareholder didn't like the transaction. They are not saying that they didn't like it because of the money. They're just complaining that they didn't get involved into the situation. And this also shows the key issue here with Italian, French, whatever telcos is the management, also Vodafone. These are pension funds owned. My pension fund doesn't care about me. They have their job. They do what they have been taught in school 30, 40 years ago, and diversify no matter the return. The markets are efficient, and therefore you see this, and they have invested most of Italian pension fund money here because the market cap was extremely high, and now they are running away from these things. But yes, again, operating FCF going up on higher prices, and they will double their EBITDA, likely go to free cash flows, and now they have full financial flexibility. Everything will be better, free to run, fit to win. And I listened to the CEO giving an interview at not CNBC but CNBC, and he said that they will grow. If they grow, yes, then if they reach 1 billion of free cash flows, pay that as dividends and buybacks, the stock will more than double in the next few years. But the key here is that if they reach that, let's discuss the investing risk and reward. When we want to invest in something, the key question we need to ask ourselves is what needs to happen for this to give us a 2 or 3x, and also later we'll discuss what can go wrong. And we now have a market cap of 4.85 billion compared to the current EBITDA. We are trading at 4 times EBITDA. If EBITDA goes up, we are trading at 2 times EBITDA. Okay, that's 2 times EBITDA. in the normal world it looks like cheapness. And then I look at their cash flow from operations, and those without selling the netco went down significantly over the years. So, and the free cash flows went into negative territory. Now, I have analyzed CK Hutchinson on my research platform recently, and they own 3G Europe, and they say how it's a difficult market and how some markets like Italy, they see as impossible to make a profit, and they will see how it goes over time because of the competitiveness and other issues like a declining 15% GDP. I think that people don't realize what is minus 15% GDP versus Germany growth of 30-50% in the same period. That's the difference between big profits for these companies and no profits and total destructions. And those are the calculations also that make the difference between good dividends and 2-3x returns and minus 90%. This is very important, but it doesn't reach the headlines because no one thinks in 15-year periods. And also, what can go wrong and what is the valuation? Let's compare it to Vodafone. Market cap of 21-22 billion euros, as it is in pounds. They have already a dividend yield of 11%. And they have not been growing in Italy, which is following what Telecom Italia Mobile has been doing. If I compare this to their guidance of 13 billion of EBITDA after leases, compare that to the market cap that is trading at, let's say, 2 times EBITDA. And even if Telecom Italia Mobile does what they promised and grows, they would be trading at the same valuation as Vodafone is trading now. So we have Vodafone that's already trading and what they are promising they will reach. The risk is always what if they don't reach that? And if we go to Warren Buffett's 1979 letter, both of our operating and investment experience, Warren Buffett, when he was young, caused us to conclude that turnarounds seldom turn. Of course, the CEO has been hired to market the turnaround at the same energies and talent are much better employed in a good business purchased at a fair price than in a poor business purchased at a bargain price. But then we also have to ask ourselves, how can this give us a return? Let's say everyone expects 0.6 when things turn, but if everyone expects this and they buy now and sell, then it might not actually happen. And always the question we have to ask ourselves is, can things go lower? And this is a risk. Italian stock market doubled in the last few years, also from the scare of 2022, really great returns, 50% up. If it goes back down, this company will also go back down. Another 30% will follow the market. And the value investing conclusion that we'll also discuss more in depth in some of the next videos is that today you can be paid for taking that risk of holding something until the value unlocks. With Telecom Italia, I'm not being paid. With Vodafone, we can be paid 10%, but we made a video there and the management simply isn't there to give me a healthy risk and reward. I think that in the case now, you can make some money on Telecom Italia Mobile. If you are quick, the deal will likely happen by the end of the year. It has been confirmed, the money will come. That will likely be a catalyst, but I would not shoot for 50, 100% in the next 6 months. If you make your 30%, if you can go around, let's say, that position from 0.20, buying a little bit more, if it dips down, selling, adjusting, you can make a good 30 to 50% on this position, but you must be fast and quicker than any negative Italian recessions or crises that are always around the corner. So we'll be discussing more. I always look at telcos, but I feel the key is always the management here, governments, etc. There are better and cheaper telcos in Europe for a longer term perspective on things. Thanks for watching. Check my research platform. I'll see you in the next video.